Welcome to ForexTV.com's PM Exchange. It's Wednesday, December 5th. I'm Remy Hoke. Today I'm joined by Ed Ponsi, President of FxEducator. Good afternoon, Ed.
Thank you for having me, Remy.
Great to have you on the show again. Well, in today's session, we saw the U.S. dollar gain against the majors following stronger than expected data. So let's start out by taking a look at the ADP data we had this morning, and the market is awaiting Friday's non-farm payroll. So if you could briefly tell us if today's ADP data shifts expectations for the Fed's decision next Tuesday.
Okay, that is the question right now, and I think maybe it does just a little bit because the number was huge. It was a huge payroll number from ADP. Now, it could be an anomaly. It could be a one-time thing. We've seen the ADP number come in before where it really wasn't necessarily on the mark. So that's a possibility, but I think regardless, I think the Fed's going to cut on December 11th. I think you'll see a quarter point. I know a lot of people are talking about a half a point right now. I really don't think that's the case. Here's what I really think is going to happen is I think you're going to see more action on the discount rate. The whole problem, in my opinion, right now is it's almost a rerun of August when banks were afraid to lend to each other, and then we saw the LIBOR spike up this week. So I think what the Fed really wants to do, and this would confirm something that Janet Yellen just said 2 days ago. She said that she wasn't unhappy with the use of the discount rate. I think the Fed cuts the discount rate by 50 basis points and cuts the Fed funds rate by 25 basis points. They're going to try to eventually equalize those rates so that there's no stigma attached to borrowing from the discount window. I think that that is really the goal right now. So I think you're going to see a quarter point on December 11th. You'll see another quarter point at a subsequent meeting. But the interesting thing will be the discount rate.
Okay, and now that you've given us your expectations from the FOMC, let's take a look at the other central banks. In yesterday's session, we saw massive moves in the CAD against the dollar and yen following the surprise rate cut by the BOC. But looking ahead to tomorrow's session, we have the ECB and the BOE. So if you could just tell us how you expect the BOE and ECB to act in tomorrow's session.
Okay, well, as far as Canada, just to briefly touch on Canada yesterday, yes, that was a bit of a surprise. Canada cutting rates, and you're going to see the Great Britain start to cut rates eventually. I don't think it'll start tomorrow, but more and more you're going to see more rate cutting. But you know what? I don't think the Bank of Canada is going to cut rates nearly as much as the Fed. The commodity rally, it's cooled off a little bit, but I don't necessarily think it's over. The story, the underlying story, the growth story is still there. You know, I'd beware. A lot of people are flipping the switch now and they're getting ready to sell Canadian dollars. I think that this is a pullback in a strong Canadian dollar, and I think that it's probably, you're going to see a little bit more U.S. dollar strength. But I think eventually, I think you're going to be saying around 105 or so, it's going to be time to buy Canada and sell USD. Now, as far as the BOE tomorrow, Bank of England, it's a close call. You know, the meeting 2 months ago, 8-1. 1 month ago, 7-2. The doves are gaining strength. Tomorrow, it's a close one. I don't think they're going to cut rates yet. I think you're going to see a 5-4 vote, but I think they're going to hold off for 1 more month. I think they want more inflation data. I think they want to see inflation come under 2% annual rate. It's close, but it's not quite there. So I think that you're going to see the Bank of England on hold just a little bit longer. But the way that pound is falling lately, it's almost as if everyone's already pricing it in that you're going to see rate cuts, and I think that's inevitable. Let me just touch on the ECB while we're on the topic. They can't cut rates in Europe just yet. Check out the producer price index number from earlier this week. 0.6 month over month, 3.3 year over year. They can't cut rates, not with inflation running at those levels, and they also have very strong growth. The growth has been very robust in Europe. So I don't see them. I think you're going to see in the not too distant future, Europe stays at 4% for several meetings going into spring of 2008. You'll see Europe at 4%. You'll see Bank of Canada at 4%, and you'll see the U.S. The Fed at 4% as well on the Fed funds rate.
And indeed, it does seem as though the market is pricing in a rate cut from the BOE. We've seen sterling dollar, it is currently trading around 202.96, and that's quite a difference from the 205.84 we saw late yesterday. But going into tomorrow's morning session following their rate announcement, where do you think the pair will trade in the New York session?
Okay, well, as far as tomorrow is concerned, like I said, I don't think they're going to cut tomorrow, so I think you'll see the pound maybe gain back some of what it lost earlier today. There were bad housing numbers in the UK, and the pound took a pretty sharp slide. But I think you might see that back up to around 204 tomorrow. But where's the support level on pound USD? I think it's right at the big handle, the big figure 2. You're going to see the pound, you're going to see some short-term strength maybe from the pound. If I'm right about the interest rate decision tomorrow, you'll see some very short-term strength in the pound. It won't last, and it's going to float back to that huge psychological number, the big 2, and I think that's where it's really going to set up shop and find support.
Okay, and let's move on to euro dollar. We've seen the dollar gain strength against the euro in today's session, and volume for the pair has thinned out at the end of the New York session. But going ahead, looking to tomorrow's session, where do you see support and resistance for the pair?
Okay, Bank of England will, the ECB definitely will not cut rates. I think it really depends on the language tomorrow. Does Trichet use the vigilance, right? That strong vigilance, does he pull that out? I think that you could see the euro strengthening against the US dollar tomorrow. I think tomorrow you'll see it back on the 147 handle, maybe around 147.50. And the resistance is going to be, again, it stalled out just below 150 before. 150 is a huge psychological number. A lot of people are treating the recent strength in the US dollar as if the dollar has bottomed out. I don't think so. All my trend lines are still intact. All my moving averages are still intact. I think the euro is still in an uptrend against the US dollar, and the dollar has had some recent strength, but that is really just giving people like me a chance to buy euros and short US dollars at a better rate. That's the way that I'm playing it right now.
Okay, and one pair that I want to touch on, since you mentioned the euro, is euro-yen. In today's session, as we near the close, we're seeing U.S. equities manage to hold on to gains. But if you could tell us what you see as your forecast in your charts for euro-yen.
Okay, euro-yen is a very interesting pair right now. The euro is very strong, and the yen seems to be gaining favor. So, you know, for the longest time, too, for most of this year, the yen was basically a punching bag. But especially when credit markets tighten up, the yen seems to do really well, and that's what we're seeing right now. So I wouldn't go against the yen right here, and I wouldn't really want to go against the euro because, you know, I said great strength in growth and high inflation means they're not cutting rates. So I think it's stuck, basically, between 160 and 163. Right now, we're trading, I think, around 162 and change. I think we're basically there probably for the rest of the year. The one that really I find interesting is the pound yen, because the pound, of course, is much weaker than the euro, and the euro has been doing a number on the British pound. The yen, while holding its own against the euro, I think the yen will do very well against the British pound. And I think that you could see a big move from here. That's the one. It's so volatile, and it makes such big moves. I think you could see a huge move. I think potentially, I mean, there's some support at 220 on pound yen, and that is a huge level. If 220 breaks, you could see 205. It's a long way down, I know, but the pound is really falling out of favor, and the yen seems to be coming in. And it's just that type of a situation. You've got a huge head and shoulders on the weekly chart on pound yen. I mean, everything seems to be lining up.
Okay, and last but not least, before we wrap it up, now that we've covered the majors and some of the key crosses, are there any other currency pairs that you think FX traders out there should be watching?
Well, I do like Aussie USD at this point. Again, here's another situation where the currency pair has done so well, such a great uptrend. And, you know, Australia had a chance, you know, yesterday to move on interest rates, and they held firm at 6.75. So you've got Aussie holding firm, U.S. cutting rates, so the differential is going to widen. I really like Australia here. I believe in the metals rally. I believe in the commodity story, unless the commodity story changes. I mean, unless they come out and say that growth is slowing down in China, I like this pair. I like Aussie USD.
Okay, Ed, as always, thank you very much for coming on the show.
My pleasure, Rennie.
This has been your Forex News with Ed Ponsi, president of FxEducator. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks rallied on the heels of today's U.S. data releases. Investor sentiment was supported by some of the stronger-than-expected figures out this morning. Although the market still remains wary about housing market and credit concerns, equities rose on the day with the major indexes all up by 1.5%. Earlier, the ADP employment report showed that U.S. private sector employment rose by 189,000 in November. The figure exceeded even the most positive forecasts ahead of Friday's non-farm payrolls data. And the ISM services sector report fell to 54.1% in November from the 55.8% in October. And the Labor Department reported that Q3 productivity in the non-farm business sector rose at a 6.3% annual rate. Meanwhile, the unit labor figures fell 2% on an annual basis. At the closing bell, the Dow Jones Industrial Average soared 196.23 points to 13,444.96. The tech-heavy Nasdaq gained 46.5 points, closing at 2,666.36. The S&P 500 gained 1.5% or 22.22 to end at 1,485.01. And in the fixed income market, U.S. Treasury bonds fell following this morning's ADP employment report and strength seen in the productivity figures. The benchmark 10-year note fell with the yield up at 3.91% from 3.9% late yesterday. Meanwhile, the 30-year bond fell with the yield up at 4.39% from the 4.37% late Tuesday. And in energy, NYMEX crude oil futures ended the session down below $88 a barrel. Prices reversed gains seen before the petroleum inventory report. The EIA said that U.S. crude inventories fell by 8 million barrels in the week ended November 30th. By the end of today's session, January crude closed down 83 cents at $87.49 a barrel. Meanwhile, OPEC kept production steady after much speculation about an increase in output. OPEC will meet again on February 1st. And taking a look at other petroleum products, the EIA reported that U.S. gasoline supplies rose by 4 million barrels in the latest week. At the end of the session, January RBOB gas fell 3.47 cents, closing at $2.217 a gallon. The EIA also said distillate stocks climbed 1.4 million barrels. January heating oil ended the session down by 2.25 cents at $2.4893 a gallon. Meanwhile, January nat gas futures added 3 cents, closing up at $7.185 per million BTU. The EIA will release U.S. nat gas inventory data tomorrow morning at 10:30 a.m. Eastern. Over in the metals complex, gold futures ended down on the day. COMEX gold prices pulled back as the U.S. dollar gained against the major pairs. And earlier, gold fell to an intraday low of $7.98 an ounce. February gold ended the session down by $3.90 at $803.70 an ounce. In other metals, March silver finished the session unchanged at $14.46. December copper added 1.8 cents, closing at $3.0160 a pound. This afternoon, we're joined by Derek Fry, head trader at O&F Futures and Options. He'll give us his outlook for energy and metals futures.
Recapping the action that we saw in the energy and metal sectors today, I'll start with the metals. We did see a pretty much broad-based pullback in the metal complex against a strengthening dollar, largely in the face of this morning's ADP report. At the same time, we did see crude kind of all over the map today, of course, with it being a inventory report day. We've seen both sides of positive and negative. I've mentioned here before that we believe that we're going to see price stabilization between $85 and $88 this week, and then a resumption of the rally back towards the mid to high 90s, possibly testing that mythical $100 level. I mean, frankly, the $100 level is insignificant other than it being a round number, but it doesn't change anything in the underlying market. So it's we really don't care if we touch it or not, but we do expect, like I said, bottoming action here over the course of the rest of this week, and then a resumption of the uptrend back into the 90s with a target somewhere between 95 and 98, retesting those levels at the very least. And like I said, there is still the outside chance we could push above 100. Looking at back to the metals for a quick second, I do believe there that you will see continued pressure on the metals as we go through to tomorrow's BOE and ECB rate decisions. We are expecting both central banks to cut rates, and the euro in particular is backed by 10% gold. So if they cut rates and if the euro responds the way we would expect it would, which would be to sell off, that would and frankly should drag gold with it. So we see more downside in gold with a possible target all the way down at 750 over the not too distant future.
That was Derek Fry, head trader at O&F Futures and Options, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Tune in tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.